Alrighty guys, in today's video, we are going to be talking about what is going on with DWAC, also PHUN. Should you buy these two companies? The growth is literally off the charts. It's crazy. This thing went literally from $11 all the way up to highs here at $175 before selling off just as fast as this thing gone up all the way down here to about $68 a share and really bounced back up because a lot of people thought and used this opportunity to buy that dip. You know, people bought the dip. It went all the way back up to about 115 and slowly has been just stair-stepping its way down. And if we actually look at it in a little more detail, you can see, you know, there were several circuit breaker halts because so many people were interested in buying this stock and they just wanted to get in. There was so much emotion in the market today. And you know what the emotion played? It played a huge factor, and I guarantee a lot of people lost a lot of money or are losing a lot of money after hours today. The reason why this stock has gone up so fast is because Trump media announced that they are merging with this company to create a social media platform very similar to Twitter, but it's going to be called Truth. You know, and Trump, being Trump, he always wants to create these truth medias and him getting banned on all these other social networks. He's just going to create his own. And he already had millions of votes this past election. So he's thinking, okay, if all these voters just transfer into this app, I'm looking at a billion-dollar idea. And so that's what a lot of people are getting in on. And the news absolutely just sparked it. Yesterday went from lows at $10 all the way up here to about $50. And that was giving a return of about 350%. This thing just continued to rally up. You can see after hours, everybody was getting in on it. Hedge funds were getting in on it. And then this thing just spiked, right? This is when a lot of retail traders could get in, and this thing spiked up. Everybody kind of dumped their shares because the thing went up a ton. This thing literally went from, you know, it opened. Let's see if we can get a little more detail. Opened at about 120, spiked all the way up to 175, giving a return of about 47%. And then it sold off all the way down to, you know, all the way down minus 91% in the matter of 1, 2, 3, 4, 5, 6 minutes. This thing lost 91% of value. And so when I'm looking at this, the main question that a lot of people are asking is, should I buy this? That's the main idea. Right now, there's so much volatility, so much risk involved. And I think that there is an opportunity maybe on a short term, you know, getting in on a good price, getting in on some support, because there is support here at about $65. You know, you can see it has that tendency to hit it and get a little price action. I think that's where the best outcome is going to happen. But if we're looking 10 or 30 years down the road, it's hard for me to judge, you know, because where's Trump going to be? Where's this social media platform going to be? Is this thing going to be the next Facebook, Instagram, Snapchat, Pinterest? Who knows? Right now, it's such a small idea with a huge following, which is causing this thing to have a lot of emotion, a lot of FOMO, fear of missing out. People want that next Facebook. They want the next Snapchat, causing this thing to massively squeeze up. And so, yeah, should you buy it? You know, I think a good strategy for this stock, if you want to buy it, would be dollar cost averaging. Use the volatility of DWAC to your advantage, right? So what this means is instead of trying to just buy it when it's overvalued or undervalued or whenever you want to buy it, what you do is you just say, hey, no matter what the price is, every single week I'm going to invest $30 or $20. So what this does is if this stock continues to go up, you're still going to be making money because the stock value goes up. But the beauty of it is when it has the volatility, like it sells off 91%, you're just going to buy it average down your shares, and once the stock recovers, you're going to make a lot more money. So both options are good. I definitely think it's a higher risk, higher reward play, but still so much opportunity. Another stock that absolutely went crazy is ticker symbol, what is it? PHUN. This is another company that was getting looked at by the Trump. You guys can see it was another company that was getting in on the Trump stock. This is the pretty much the other company here. You can see it has lows here at $1, highs here at 24, giving a crazy return of over 1,000% of value. So anytime you see that, there's always a lot of risk for sure. Is there a reward? Of course there is, but you have to understand higher risk, higher reward. So this thing could easily sell back off to $4 or $5, but it could also come back up to, 18 or 20 bucks. The risk is there for sure to make some money. I definitely think, be smart with it. Don't go heavily in it for sure, because there's going to be a lot of people that are going to be trying to short and just dump shares. It's going to be definitely a risky stock for sure, but still carry some potential. For me, am I buying it? I'm going to be just doing the simple dollar cost averaging. I'm not going to worry about price. I'm just going to say, okay, I'm willing to lose 1% of my portfolio and do a higher risk, higher reward play. And that's what I'm doing with both of these stocks, guys. So I hope you guys enjoyed it. And overall, I hope you guys got something of value. We will see you guys later. Remember to stay happy, stay positive, and stay safe. Take care.